let's take a look at these numbers. I mean, a 41 billion naira provision weighing on the group's operations at the moment. It's certainly something that was anticipated, but the question is this a conservative measure or are your risk ratios pretty high?
Thank you very much, Alicia. I think it's a conservative measure. We are pursuing a convergence between our local accounting standards and IFRS, the IFRS standard, which we hope to implement by December. And what we have done is to try and harmonize some of our provisioning in that particular respect. So that's part of it. The second part of it is that the central bank conducted a special examination in conjunction with the Nigerian Deposit Insurance Corporation. And of course, the end of that exercise was a stress test result that showed that we needed to make 40 billion in additional provisioning. And that we have taken in. But the beauty of it all is that as we took it in, we also had some recoveries. We had a special recovery of about 21 billion. And that's what mitigated it and brought it down to the 41 billion you're seeing as a one-off provisioning for the period.
Of course, this entire cleanup process has forced banks to become more wary of risky lending. To what extent has your lending policy or risk mitigating strategy changed in the current environment, because your provisions are up fourfold?
Well, our provisioning, I think I start by noting our provisioning. Our provisioning level is at 7.4%. Our target was 5%, but we're at 7.4%. And we came down from 10% at the last quarter to 7.4%. So we're making progress. And against the backdrop of the fact that provisioning level amongst a lot of banks is a lot higher, and in some respects it's as high as 40%. So one could say that UBA is highly conservative and that the provisioning level is within tolerable limits. But we are very specific in terms of what we're doing. Excuse me. We are very specific in terms of what we're doing to actually improve or even further improve on what we're doing in that particular respect. First and foremost is that we have an internal capital adequacy testing mechanism that we have put in place. We are also carrying out our own internal stress testing more regularly. And the corporate governance environment in this bank today is at a very, very high level. And that's why, as I said the first time, we are bringing about some convergence between what we are doing within the local gap, that's the general accounting standards, and the IFRS standards. So in terms of what we're doing, we think we're on track towards ensuring that there will be no recurrence of one-off provisioning like this.
Okay, so that's some of the factors pertaining to lending specifically. What's interesting is that your results announcement boasted this robust growth in your deposit base as well. This at a time when many are struggling to really attract deposits their way. So what are you getting right that others possibly aren't?
That's a difficult question. But I think we have our own uniqueness. UBA is a unique bank. I mean, you mentioned, for example, that we grew, we have a very diversified income base. That's the truth. Our gross earnings from outside of Nigeria, for example, is increasing. It's currently at 10%. It used to be about 3.5%. That is a fundamental difference. The second one is also the fact that we're embracing a group shared service platform. Today, for example, in the whole of Lagos, we have all our branches in Lagos numbering about 140, 150. We have a major part of what they do domiciled in a central location where we are able to, treat those transactions. What does that help us to achieve? One is that it helps us in risk management. Number two is that it helps to bring down the cost. And thirdly, it helps us to standardize what they're doing. And we hope to replicate this across the country. So those are two fundamental things that we are doing, which perhaps some other banks are not doing exactly in the same way. And the third point is about risk management, as I told you. We're pursuing a very aggressive risk management posture. We believe that part of the challenges in the world today border around risk management, and we are learning very fast. And we are hoping that as we move forward in the next set of years, things will improve.
Well, Victor, your balance sheet size stands at 2.1 trillion naira. That's the equivalent of roughly $14 billion. Just how comfortable are you with that size balance sheet? Because the group continues to pursue its growth strategy pretty aggressively right now.
Our growth strategy isn't pretty aggressive. It's cautious, but we have a plan. And our plan, as I said in one of my interviews, is that we have stratified Africa along 4 lines. We have the oil-producing countries, the politically stable countries, the mineral-rich countries, and then the other countries. So you can see that every single time we open in, say, Kenya, or we're opening an office in Tanzania, it is in line with this particular strategy. So that's as it relates to growth strategy. Our balance sheet at $2.1 billion or $14 or so billion is a reflection of this. Again, there are so many things that we're bringing into play in this particular respect. We are growing our balance sheet. We want to have a very strong market share. Today we're at about 12% of the market in the local environment here. We plan that over time, 2011, we should be at a minimum of about 20%. But in addition to that, is that we want to diversify that balance sheet and make sure that at least about 30% of that balance sheet actually comes from outside Nigeria.
Let's focus and get country specific here. I mean, you've mentioned that you've recently made an investment in Kenya. You've begun operations there. What impact do you see operations there having on your bottom line? Because Kenyan banking arena is a pretty competitive one.
Well, it is competitive just like Nigeria is. So we are replicating some of the knowledge that we have here in Kenya. We believe we'll do well in Kenya. Kenya is an environment that, you know, we have been in Uganda for a while, and we aren't doing badly at all in Uganda. And Kenya happens to be a bigger market. So my view is that we'll do quite well in Kenya. It can be tougher than what we do here in Nigeria.
Victor, one of the struggles that the Central Bank of Kenya is having with Kenyan banks at the moment is the fact that despite the central bank lowering its interest rate to 7.75%, we don't have Kenyan banks actually lowering their interest rates in tandem. We've got an average commercial bank standing at an average of a 15% charge when it comes to interest rates. How competitive can you afford to be in that regard?
Well, Kenya is a local market, and I believe that part of the reason why the banks are not moving in line with the base rate perhaps could be because they are localized. We are a global bank. We happen to be in 14 countries today. And therefore, there are replications, there are things we can do in Kenya that you cannot, it might not come largely from the local opportunities there. We can leverage, for example, in Cameroon. Cameroon's cost of fund is about 2%. And there are chances that you can be able to leverage the funds you have there and move it into Kenya and be able to bring down the interest rate there. I mean, we will look at the blocks, we'll look at the business. We're just entering the market, but over time, I'm sure we'll get it right.
Let's look at Nigeria just to end off here. I mean, what have you made of the comments out of the government this week that the government could potentially acquire shares in some of the 9 banks it's rescued over the past 2 months? This is if institutions fail to recapitalize or find buyers for these banks.
Well, I think it's still a long shot. The first requirement, I mean, the first point I think the central bank governor is emphasizing is that they are very open and they will welcome foreign investors, perhaps even local investors buying into the banks. The second point I think I've heard him make is that they will welcome consolidation amongst those banks. Perhaps the third one, which is a long shot, is the one you just talked about.
How hard is UBA working on consolidation? Could we possibly see UBA acquiring any of the failed 10?
Not now.